Hey everybody, it is Mark Coe for October the 2nd. It is the first day of the week, first day of the month, first day of the fourth quarter. So here we are to bring it in for the last 3 months of 2017. Hope everybody's doing well. Wanted to welcome everybody into the 50K challenge, which just started today. So we've got our first trades on in that room. So it was a great open house week last week. Thank everybody for joining us and see what we have focused on today. Well, we are long the model in the euro dollar from 49. Currently sits about 14 ticks out of the money. Wanted to look at these levels, same levels from last week that we were focused on, 17.20, and why this level would be of some interest on an intraday basis. On an intraday euro, it's lower than the model, so first off, that would keep risk a little bit tighter. But also, it's the level that got reacted, or that the level that the euro reacted from last week, and that's the important part. In looking at levels, you get the question a lot, and levels analysis is different to people. It's not something they've always studied. But what makes a level work, what makes a level be used going forward, it's the market's reaction to it. And so, one of the common things I see people do is draw a ton of levels. Well, if you draw a ton of levels all over your screens, certainly you're bound to get a reaction from one of them. But that's not the idea. The idea is, well, what levels can I use and how do I use them? How do I create that edge for myself? Well, that edge is created with your minimal risk with a larger reward. That's the edge. It's not an informational edge where you're saying, hey, I have some information that the market's not privy to. I'm sitting in my room. I'm a little day trader and I have some really valuable information. It's not about that type of edge. It's an edge for yourself saying, look, if I'm going to deal euro dollar from the long side and I'm going to deal in this little zone right here, then if the market moves beyond that zone, I'm going to cut my losses. I'm going to take a very minimal loss. But if the market rotates back to this level, that's paying me roughly 8 times for what I risked. That's my edge. My edge is created how I'm able to risk less and make more. And then the bottom line is if that edge is not present, if that risk-reward scenario isn't present, then I'm just simply not going to deal. I just won't deal. And so that discipline is maintained constantly in the markets where you're able to say, is there a trade here or is there not? One of the mistakes retail makes time and time again is they're hyperactive. They force trades where there isn't a trade there. And so you have to ask yourself, do you want to do what 90+% of the retail public does, which is not make money? Or do you want to stand apart from the crowd and do what it takes to actually be profitable? If you're looking for fun, excitement, deal, activity, there are probably a lot of better ways to achieve that. But if you're looking to be profitable in the market, what you have to design for yourself is an approach and a strategy that's 1, profitable, and 2, repeatable. Right? And so I can repeat that scenario time and time again. I can deal on euro here and look for my reward. I can deal on euro here and get stopped out. But it's the sum of those trades that's still going to leave me positive, right? It's not that I'm looking at euro and say, well, I just have to make an intraday trade today. I don't have to do anything intraday today in euro. I don't. But if it presents itself, I'm going to deal on it, but I'm going to be consistent in my approach. So euro's at a fairly crucial little intermediate term level here, and just so you have a frame of reference of what you're looking at in euro, back up, get to a bigger chart, and here's what you understand. This is the edge that I'm looking at here in euro. It's a longer term bottom edge, and it's this whole area. That's what we're working on in euro right now, and you can see what's happening. Sellers have taken it down to this level, but going back to July, this level is held from the buy side that whole time. So below this, it's going to get a lot more slippery for the buy side, but until that gives way, it's still a very formidable area for euro buyers and euro long. So keep in mind that that's the area we're dealing on. When I was on that 60-minute chart, we were just focused on this little activity here. So it was the bigger picture that brings your attention to it. Then you're dialing in the detail on a shorter term time frame. So I'm always that top-down analysis look where I want to see what is the big picture doing and then understand those levels that I'm operating. And so this level is not a 5-tick area. It's closer to about 55 ticks that you're really focused on. This is just the top edge of it. So going into the rest of the week, we'll keep up with euro on our charts. Um, keep looking at E-minis making new highs. Not a lot of pullback here. It's kind of one-way train. E-minis are 20 points higher from earlier Friday. And, we're continuing to see a strengthening dollar, a strengthening stock market here in the U.S. And so we'll see how that plays out as we approach the fourth quarter here. So for the 2nd of October, Mark Coe, and cheers. We will see you all tomorrow.